The purpose of this presentation is to explain what caused the housing bubble and the collapse of the American economy. I'm a retired man who loves history. During the 2008 housing meltdown, President Bush reportedly asked what happened. To find out what happened, I read many books on economics, plus 4 books on the Great Depression of the 1930s. Hadn't the politicians then enacted legislation, including the Glass-Steagall Act, so a depression wouldn't be repeated? We need to know when the bubble began. The housing bubble did not happen overnight. This chart, which appeared in the New York Times, is easy to understand. This chart shows housing prices over the last 100 years. The grayed out area here is the bubble, and it clearly started in 1997. So what happened in the 90s? I recently read Reckless Endangerment by Gretchen Morgenson, a highly respected Pulitzer Prize winning columnist for the New York Times. Gretchen Morgenson and Josh Rossner spent years interviewing people in the government and in the banking industry to find out the answer to what happened. Right in the prologue of this book, Clinton is quoted as saying in November 1999, more Americans should own their own homes to expand the American dream. She also wrote that Clinton launched the National Partners in Home Ownership with one goal: raising the numbers of home ownerships across America. And further on, how Clinton's calamitous home ownership strategy came to blow up the American economy. Gretchen Morgenson names the culprits and explains their involvement. In the 1990s, the most powerful man in the United States was President Bill Clinton. Clinton and James Johnson were roommates and friends in 1969 when they attended a conference of anti-war activists. By the 1990s, James Johnson, a Democrat, was the head of Fannie Mae, and he changed the bonus structure at Fannie from a number of factors to a lone factor of profitability in the company. To increase his bonuses, he increased company's profitability by taking unimaginable high-risk positions in the home mortgage market. He needed the help of government, where many wanted stricter regulations on Fannie. He spent over $100 million in the 90s by using Fannie's Political Action Committee money to influence, that is, bribe, congressmen to support Fannie Mae in his efforts to lower lending standards. He weakened the Carter administration's Community Reinvestment Act, which was an act to prevent redlining poor districts, by forcing banks to extend mortgages to qualified buyers. I emphasize qualified in these poor areas. The pressure was on to lower the lending standards. Along the way, Johnson amassed a fortune of $100 to $200 million and made many millions more later when he joined the board of directors of many companies, including Goldman Sachs, where he usually recommended and got high bonuses for their executives. He received low-interest loans from Angelo Mozillo at Countrywide, a bank that capitalized on this program by encouraging the poor and uninformed to take out ARMs, or adjustable rate mortgages, with low down payments, and some of Countrywide's brokers encouraged falsification of the loan application. Countrywide received higher fees on ARMs. This is the biggest, but there are other similar banks that were formed. If you thought the ratings agencies investigated the companies thoroughly, as I did, you and I were wrong. The rating agencies are for-profit companies where the top brass earn money by giving out good ratings, not by investigating but by accepting the figures the companies give them. They consistently gave high ratings to Fannie Mae and the high-risk collateralized debt obligations, or CDOs. Goldman Sachs amassed great numbers of these high toxic mortgages and received high ratings from the S&P credit agency. They then bundled them and sold them around the world. Goldman encouraged their brokers to sell them to their clients and market the CDOs. Meanwhile, the top brass at Goldman Sachs took positions opposite of these CDOs, BOs, which they were recommending to their clients. The regulators should have known better, especially Alan Greenspan. In 1969, he wrote an article about the danger of central banks, namely how politicians use them to print money and debase the currency so that they can give stuff to voters without taxing them. Debasing the currency is called the hidden tax because the voters don't know they are being taxed. When Greenspan became the Fed chairman, he did exactly the opposite to what he warned about in 1969. He debased your money in the 90s by printing money, and he kept the interest rate low to encourage Clinton's home ownership initiative. The move was spearheaded by the Democrats in Congress who wanted the poor to share in the American dream of home ownership. Clinton's congressional helpers, culprits that is, were unremitting in their quest to lower lending standards. Later, Barney Frank on the House Financial Services Committee was asked what he would do if the poor were destroyed when they lost their homes and money. He said, "We'll deal with that if it happens." Maxine Walters said the poor should not have to pay any money down. Senator Dodd on the Senate Banking Committee went along with Clinton's directives and also received low-interest loan from Countrywide. Notice the pernicious thread of Wall Street bankers as the secretaries of the Treasury. From there, they continue to rob the people of their money for their friends and cash in later as lobbyists or officers in the banks. Robert Rubin and Henry Paulson, both from Goldman Sachs. Paulson was under Bush. And then you have Geithner, who is considered Rubin his mentor. And he became the Obama's Secretary of the Treasury. You may ask, why is Obama on this page? I don't believe he is mentioned in Gretchen Morgenson's book. He was a community activist in Chicago, advising Acorn, a radical organization, pressuring banks into giving low-cost loans to the poor. He was a strong advocate of the Community Reinvestment Act. From 1992 to 2004, Barack Obama ran leadership training sessions for the Developing Community Project and served as an attorney for the group in Chicago. We must look at the straw that broke the back of our economy. The Gramm-Leach-Bliley Act. Republican Senator Phil Gramm authored the bill, and several people in Congress on both sides of the aisle voted against the Clinton-Johnson juggernaut. Democratic Representative John Dingell warned against creating banks too large to fail, at the same time putting taxpayers at risk. We should now look closer at the all-important Gramm-Leach-Bliley Act. Wall Street banks wanted to repeal the Glass-Steagall bill ever since it was enacted in the 1930s. It was enacted to prevent bank abuse, which was uncovered in the 1920s. If repealed, the Wall Street could have investment and insurance departments which could increase their profits and size. In the spring of 1999, Republicans in Congress passed the Gramm-Leach-Bliley Act along partisan lines, but Clinton would not sign it. The bill would repeal the Glass-Steagall Act. Then Senator Chuck Schumer stepped into the breach and, with other Democrats, added an amendment to weaken the lending standards of the Community Reinvestment Act. President Clinton signed the bill, which wreaked havoc on the American economy by enabling banks to become too large to fail, and at the same time enabling banks to increase the number of toxic mortgages. The Congress and Clinton created a double whammy on us. The bill passed when 85% of Congress voted to pass the bill in a bipartisan vote. Is it any wonder that both Democrats and Republicans deny that the Graham bill was a major cause of the bubble? Neither party wants to admit that they both were culpable in this disastrous bill that sank our economy. I believe they know what caused the housing bubble collapse, but don't want us to know that they were the cause, and we had no plausible explanation until Reckless Endangerment was published. Well, here we have President Clinton, a joyous President Clinton, signing the Gramm-Leach-Bliley Act. He's surrounded by delighted men. Here's a proud Senator Gramm, who later got a great job with a bank, UBS. Here's Senator Dodd, who later became a lobbyist for the motion picture industry. And guess who's here? It looks to me like Robert Rubin from Goldman Sachs. Here's the cheerleader, Fed Chairman Alan Greenspan. He's all behind this. He loves this. Okay. And now we have the aftermath. President Bush embraces the Clinton's home ownership initiative. Bush's administration attempts to control Fannie, but is beaten back by Fannie's influence in Congress. Greenspan's clone, Ben Bernanke, continues to inflate the money and keep interest rates low to this day, hurting the poor, those on fixed incomes, retirees, and the middle class. Barack Obama, who promised hope and change, received more donations from Wall Street banks than any previous candidate. He drove the country $6 trillion deeper into debt, exacerbating a huge debt bubble. Fed Chairman Bernanke created 2 quantitative easings, that is cover-up speak for printing money, and has just installed a new continuous ad infinitum $40 billion a month creation of money designed to monetize the debt. Again, doublespeak for putting the taxpayer and our children on the hook. In the 1970s, a congressman said that seniors on Social Security will always get their Social Security checks, but the money may not buy anything. And now we have the spectacle. We have the spectacle of the man who initiated the housing bubble, ex-President Clinton, running re-election ads supporting Barack Obama, who taught community activists in methods of forcing large banks into giving toxic loans to the poor and uninformed, causing them to lose their homes and their meager savings, which they use as down payments. These two blame President Bush for the meltdown when they are to blame. Well, I thank you very much for watching this to the end, and I hope this was helpful in your decision what to vote for. I hope we can all have good years ahead of us if we make correct decisions. Thank you again.